the tax champion. The killer solved. Thanks for coming in and strap yourselves in. I know you've been waiting for me to come back and solve the killer, and now it's time to do that. So get into thinking mode, folks. Get into thinking about corporate tax and how to save multinational corporate tax rates. Here goes. To understand corporate income tax, I'll need to take you all the way back to RMIT in the late 80s. I learnt my simple income tax from the great Normie Rosenbaum. Normie was a star of tax in those days, and apart from being in the front row and copying the odd Coca-Cola burp, he had a passion for this subject and taught us the basics of tax. So have a look at this and look at the basics of tax, because if you can understand this, you can understand why we're solving the killer the way we're going to do it. Here goes. Sales, folks, sales. Everyone can understand sales, the top line. In tax, sales is known as assessable income. Expenses, expenses of a business, they are called allowable deductions under tax law. And finally, the profit we can see there, business profit, is called taxable income under income tax. And income tax is meted out at sort of 25 to 30% on the profit, or what we call the taxable income. And that, my friends, is income tax. Pretty simple, isn't it? Sales, assessable income, expenses are allowable deductions, and profit is taxable income. And I said in a previous episode of The Killer that these multinational companies and their advisors love playing in that expenses space. Can't do much about the income. They can certainly influence the tax, and they do it in the expenses area with transfer pricing, switching their income to lower taxed jurisdictions, and massive loans, again, from lower tax jurisdictions over to OECD countries. So with those basics, here is the solution: to drag the tax back to the OECD countries and build a few more schools and roads and necessities of the OECD countries, instead of these big companies and the multi-wealthy people ripping us all off. So here goes. This is how we can solve it. Sales, so easily identifiable. These computer systems are all linked these days. It is so easy to identify sales of income or services in the OECD countries. And we are just going to chop through expenses, the playground of the multinationals and their advisors. They love those expenses, but we need to flip this on its head from a tax perspective and say, look, we're just going to apply a net profit percentage to sales, and often in the public companies that net profit percentage is about 10 to 15%. And that skips all the way through the expenses. We don't even look at them when we're talking about multinational corporate tax rates. So it's the sales in an OECD country multiplied by an industry profit percentage. And many industries are about 10 to 15% profit before tax. And then the OECD countries all agree to put a 25% tax rate onto that figure. And there's no escaping it. Every OECD country signs up to it. You just grab all the gross income, apply the agreed net profit percentage by the OECD countries, and you apply a 25% tax rate. There you go, folks. It may not be this year, it may not be 5 years, but in a global world where all these computers are connected and we're trying to provide facilities and everything for the OECD countries, there is only one way to go, and that is to take tax to the OECD level. But you cannot look at those old ways of looking at income tax, assessable income, allowable deductions, and taxable income. It's got to be chucked out the window. It's from the 20th century, folks. It's sales, net profit percentage, 10%-ish, multiplied by 25% income tax. See Mr. Trump over there in the US is dropping company tax rates. It will do nothing but give confidence to the Americans. The Aussies, they're chasing down transfer pricing and all the problems of multinational tax, but then they just get shifted to another country. That was the solution. Take it to the OECD level. Everyone knows what sales are. Apply a net profit percentage for that industry, 25% tax, and we'll keep up those essential services in all these OECD countries. That is the answer, and I'm going to hammer it home until something changes. Please join with me. You're not blind anymore. You're not deaf. There's the answer. Get on board and let's make the change. This has been the Tax Champion, solving tax for the world. See you later.